Hi everybody, I'm Lily Billings. I'm Head of Sustainability Operations here at Foresight, or not here, but with Foresight Group. And today we're going to be talking about restoring nature whilst also engaging with communities. Thanks very much. So I'm going to hand over to my panellists to introduce themselves. So if we go left to right.
I'm Hiba Larsson, and I'm the principal at Nature Finance.
Hi, I'm Brontie Ansell. I'm a solicitor and I'm a director at Lawyers for Nature.
Hi, I'm Juliet. I'm Head of Development here at the Eden Project.
Hi everyone, I'm Robert Guest. I'm a Managing Director at Foresight and I co-lead our natural capital and forestry strategy.
Great, so thanks everyone for joining me today. Many of you will be aware that there is currently a huge nature finance gap, and the private sector really need to mobilise approximately around $200 billion a year to bridge that gap. We're starting to realise now that a gap in funding for nature really does impact communities as well. Communities often depend heavily on natural resources, and nature recovery really is becoming critical from a humanitarian perspective as well. So today we're going to focus our discussions around biodiversity net gain, how we engage with the communities that we're working within, and how we tackle nature recovery and global restoration strategies that will help us to achieve that. So after this session, we hope that you'll have a stronger understanding on what some of the solutions might be to further scale deployment of capital into nature recovery ahead of your pitches on day 2. More to follow on that later. So hopefully you've seen that there's a QR code on your tables, and there's currently a question on there for you to answer. I'm just going to have a look now to see if there's anything that's come through on that. But what we'll do is we'll collate any questions that come through and any thoughts that come through on the polls, and that will then be disseminated as part of our communications when we follow up after these 2 days. So I'm going to start with you, Juliet. I want to ask, what are you seeing currently that's working around, you're in the biodiversity net gain space. So can you share what you're seeing that's working on the ground? You're seeing them being delivered practically, and I know Eden Project are directly involved in a number of these projects.
So what's working? So we're actually really good in the UK. We've got some fantastic research, evidence. We've got a really strong academic base. The science is there. We know how to do it. We know how to monitor it. I think we don't, as we fly into this new biodiversity net gain space, we don't necessarily have some of the conservation infrastructure in place in order to deliver it. But in terms of when it does get delivered, it has the capacity to be delivered really well. The question really is, do we have the mechanisms to maintain the level of transparency and verification that we need to deliver really high integrity, high quality habitats that we can, hand on heart, say, yes, that was a good job done, that was worthwhile, the money is going into the right place, and that we're asking for the right amount of money to do it. So these are big, long-term investments. I think what's working is we're hosting some interesting partnerships coming together to deliver things at scale. So we absolutely need to deliver at scale. I think we've already had conversations around cooperation being really key. But what I'm interested to understand really is, do we have the investment interest in cooperation to deliver the scale that we need to get us past 2030 and into 2050 in a really healthy place for us in terms of nature recovery.
Yeah. Okay, and Rob, obviously as someone that's been on the ground delivering as well some nature-based natural capital projects, could you please tell us, have you seen some barriers that you've come up against, especially, not just nature, but you've obviously had some impact on communities that you're working within as well?
Sure, thanks, Lily. So just to give everyone a bit of a feel for kind of what we've been doing, we've been in natural capital and specifically forestry and afforestation, which is planting of new forests and woodland creation, for about 5 or 6 years now. We've deployed about £250 million in total, so about £250 million, and we've done about 90 different projects across the UK. On the forestry side, that's about 17,000 hectares of land, and it's about half new planting and half existing forestry. We've done that on a freehold basis at the moment. We've also, as Foresight, done some regenerative agriculture investments based on sort of soil carbon and biodiversity amongst agriculture. That's been done on a kind of leasehold contract basis. So we're just getting started. It's UK for now. We are looking at European and global expansion. We're looking at Australia and New Zealand and some European geographies as well. But in terms of sort of barriers, and I'll try and canter through some thoughts, and I don't want to come across as all about the barriers. I'll try and give a flavour of some solutions that I think we've sort of come up with on the journey. But one of the big challenges we've seen as a fund manager is small ticket sizes. You know, our average deal size is £1 to £20 million. £20 million is a lot of money, but it's not really, for infrastructure investors, 20 million's tiny, and £1 million is absolutely far too small. And so I think that is a barrier. It's a challenge. There aren't aggregated portfolios out there. You know, this is a new sector. Lots of greenfield development projects need to happen. There needs to be aggregation, and then you get scale. But you know, the aggregation and the development needs to happen first. So ticket size is a barrier, and we've overcome that by creating sort of replicable models, finding good on-the-ground partners and tying them in with aligned structures, those sorts of things, and creating operational gearing and becoming slick and efficient in our investment and management processes. So you can scale, but you do need to box clever around how you're making your investments and how you're managing the assets. So another barrier is that we've got relatively immature markets for nature-based credits. So carbon credits and biodiversity credits are the main kind of credits that are available, but there are all kinds of flood protection and other credits out there. Those markets are currently pretty illiquid, and there's a relative amount of sort of challenges with price discovery. And so that's not something we're overly concerned with. We've got a portfolio of, say, 1 to 2 million credits at the moment, and we're thinking about how do we bring them to market. And what's lacking at the moment is a market that's liquid. And so I think solutions to that we can see would be two main things. One is asking for compliance-based polluter pays demand to be created, and that comes through regulation, through governments, through civil servants putting mechanisms in place to create demand for the credits. And if we get that, then that will help us to scale the market very quickly. New Zealand have got an emissions trading scheme that allows woodland credits in, for example, and in England we've now got, you know, the planning permission system is creating demand for nature and biodiversity uplifts. That's really accelerating capital coming into that space. So that's one area that I can see is putting pressure on governments for that be helpful, to give us that compliance-based polluter pays market. We can also get ahead of that by going direct to corporates and doing the equivalent of a power purchase agreement, a long-term PPA. We could do a long-term carbon credit contract with a blue chip, with a decent credit worthiness, and we could create contracted cash flows, which I think would help drive the cost of capital down. Just conscious of time, but so I'll try and accelerate. But land-based projects are inherently illiquid, and natural capital investment relies on land-based projects. European land in particular, which is a space we've been playing in, there's quite low yields, quite irregular yields. And so that's a challenge, is the illiquidity. And I think we can look at trying to improve that yield profile. Farming grants are quite hard to dislodge. And again, that comes down to having these carbon credit markets. If we've got liquid credit markets, we can give land-based assets yield based on the natural capital services that they could provide. Longevity and permanence are an issue. natural capital projects take multi decades to unlock. Biodiversity uplift doesn't come overnight. Trees take a long time to suck up carbon. And investment professionals and investment funds need liquidity. They need to be able to come in and out of investments. And that creates a bit of a kind of barrier because societies and communities need long-term investment. They need people to be completely tied in over, decades, 50 years, 100-year type sort of timeframes, which doesn't necessarily marry up very well with what institutional capital needs. So I think we can deal with that, and that's about having well thought through projects where communities and society are kind of tied in. And I think we'll talk a little bit more. Some of the other panelists have got some great ideas about how we create sort of permanence and longevities whilst also giving institutional investors that ability to come in and out. Long-term asset funds in infrastructure are a big buzzword. But I think in natural capital, we might be able to create liquidity for investors, but we need to aggregate and scale first. Yeah. So all of those things will come, but that is a challenge. And just finally, there's things about, sorry, just bear with me. Yeah, I think this is a theme that will come up on the panel today, is that we've got society needs to be brought along the way on board with us. We're changing land. So when we're doing natural capital, we're taking one land use and changing to another land use. That's not popular. If you change things in the countryside, the farmers have views on this. Everybody has a view on what's happening. So I think that is a barrier. So I think part of that is finding ways to bring people on the journey, bringing in communities, bringing civil service and government to align with their goals. But actually, how do we execute that on the ground? There are many stakeholders involved in natural capital projects, not necessarily the stakeholders we're used to in renewables infrastructure. So I'll just park it there, but hopefully that's a few challenges and barriers and some thoughts about how we might try and solve them.
Great, thanks, Rob. Hiba, I know you've got a great example of where the NDB project, where it's worked, where the community involvement and profit-sharing mechanisms have supported how successful it's been. So if you could run us through that would be really great.
Yes, because I think one of the sort of critical challenges we have, to your point, is really lowering the barriers for institutional investment, and it's also addressing liquidity risks and also the scale of investments. And what I find really encouraging is all of the multilateral development banks now that have started to issue nature-based, outcome-based bonds. One example is by the World Bank. So in 2022, they issued a $150 million bond, which was connected to the population of rhinos in South Africa. And basically, they were the credit issuer, and so the investors had the surety of an investment grade issuer, and at the same time the investors don't receive a coupon, but instead the proceeds are invested into these rhino communities. They also engage with the local population, so they created thousands of new jobs, and at the same time, at the maturity of the bond, the investors can get an uplift depending on how successful they've been with the conservation project. And just, I think it was 2 months ago, they also announced an issuance of a $225 million bond linked to reforestation in the Amazon. And it was a similar structure there. And what I found really encouraging was there were lots of institutional investors in that bond, so the Nuvins, the AP2 in Sweden, and Impacts and Rathbones, so quite familiar names, which I think is a good indication of the demand in this space. And I think although it's not directly owning assets, this is a very encouraging development of creating financial instruments that are palatable for institutional investors, because I think a lot of pension funds and institutional investors think it's a bit scary with owning nature-based assets directly. So I'm very encouraged by this, and I hope that this will bring the funding we need. And I know the focus here has been primarily on the, call it, global north, but we shouldn't forget that the majority of the world's biodiversity is actually in the global south, and the community aspect is ever so more important there because it provides livelihoods. So that's an excellent solution, I think, to addressing that. And just anchoring that in this audience, I do think that we need to view nature as infrastructure. It's a vital asset that supports a lot of the services that we need to mitigate climate. It provides inputs to medicine. It's so critical, and most of our economy depends on it. So if we can have that sort of long-term hat on when we look at nature-based solutions, I think we can pivot our thinking around where we categorize nature-based solutions.
Brilliant. Yeah, I mean, it feels like there's a real step change there, which is exciting. So Brontie, this leads us on as well, so obviously you work in nature-based law. So what legal frameworks or examples exist where organisations or individuals are being held responsible for nature restoration, and maybe how nature's being reclassified?
Hi, everyone. Well, first of all, the short answer to that is almost nothing. So law always works on a kind of carrot and stick basis. And for a very long time, we've been in the carrot mode, which I think we can all accept hasn't really worked. So the stick version is obviously heavy governmental regulation, polluter pays type law. I guess my work, in order to answer your question, my work needs a little bit of an introduction in that it's quite quirky. I am slightly infamous in the legal world for being one of the main legal architects, along with colleagues at something called Earth Law Centre, for appointing the concept of nature to a board of directors. And I was waiting for the gasp then. This is quite exciting, because 2 years ago when I did it, there was gasps in the room, and now they're like, yeah, of course, why not? So we firmly anchor our work in the kind of G of ESG. So we are moving the concept of nature positive governance forward in both business and political spaces. Because essentially, law is really two things. It's politics codified, and it's just a story we tell ourselves, right? And governance is just one chapter of that book. And so when we think about nature, nature just encompasses absolutely everything. And to consider that in our governance chapter, we don't even have a voice for nature is quite shocking. It's quite shocking that when we sit and have these discussions around how to govern something, how to make decisions about something, how to allocate funds, nature isn't even in the room. And so our work is about constructing legal, political, and philosophical frameworks that would actually allow nature to enter the room as a participant. And yes, there's an argument that nature is infrastructure, but there's also an argument that nature should have a level of citizenship rights. And I'm not necessarily saying that nature should start voting in our democratic elections. That would be ridiculous. But when you have a room where nature is present and is holding up a mirror to your thinking and your decisions and your deliberations, humans generally, research shows, do start to behave differently. And so what we're saying is that at the moment, even though there may be some level of regulation or creation of responsibility networks, a bit of carrot, a bit of stick approach, nature as a citizen with participation rights, and by that I simply mean being in the room. I don't even necessarily mean voting on a board of directors. I just mean having an independent voice of nature in the room. At the moment, that is quite a novel idea, but we foresee a world in which the governance of ESG would include nature. and nature would be part and parcel of those decisions as a living, breathing entity. Now we can break that down and we can say, if you're dealing with water pollution, you might have a river as a concept in the room. And we don't mean kind of, flows of water coming around the room. What we mean at the moment is a human coming specifically with an independent portfolio to speak for nature. In time, that might become an AI, of course. We just don't know. There's a whole raft of critique to be said around AI, which I won't get into. But if you're dealing with the ocean, it might be a member of a local community that is heavily impacted by what's going on with that particular ocean or that particular sea or that particular lake. A really good example of this is Loch Ness, which is, I'm sure you've seen it on the news, it produces a huge amount of drinking water in Northern Ireland, and it's got huge environmental problems. And at the moment, we're working with community groups and with CICs and NGOs and other stakeholders to bring the voice of nature, the voice of the lake, of Loch Ness, essentially, to those deliberations as to what happens to that body of water. And it's a huge biodiversity rich area, but it hasn't got a voice in any of the discussions that's going on. It hasn't got that independent voice that says, hey, hold on a second, this is what's best for me. And just in case you do still think this is completely outlandish, wacky, and radical, of course, we already do these things. We already do it in two major areas of our lives. All of us have experienced some form of parenting, whether it's we've been a child of a parent or we are parenting our own children. We speak for them all the time. Even when they have their own voices, we still speak on behalf of them. There's been many a time when I've said to my daughter, oh, they're asking you that, and before she can answer, I've given an answer for her, right? We do it all the time, and I naturally think, oh, I should have let her speak. It's that moment we think, oh no, I should shut up and let her speak. She has got her own voice. But also the other big area of our lives in which we see this, and perhaps some of us actually do it, is acting as company directors. The company is an independent, adaptive animal within an ecosystem, and you, as the voice of the director, as the director of that company, you're transient. You'll be gone, and someone else will take your position in time, and the company will continue to exist. So this is nature just interrupting my speech now. Stop, you've said enough. So we already have two major areas in which we understand how to bring the voice of an independent thing, whether it's nature, our child, or the company's voice, into the room. So we can do this. It's really eminently possible. I'll stop there for a moment.
Yeah, that was great, thank you. So also, when we obviously all caught up the other day, we talked about how communities doesn't necessarily have to mean people, it could mean nature. So we've seen various approaches to community engagement across various regions as well. Obviously your approach has to change depending on location and what the topic may be. So how can we ensure that we tailor an effective community integration when we're looking at global restoration? So I'm opening that to the floor, to any one of you.
So how do we effectively, I think it's going to come our way anyway. We're going to have to do it as part of, if you want to deliver, I think in the future, biodiversity credits or biodiversity units, whichever, the multipliers themselves in time will, we're already seeing that people are suggesting that they will have to have some kind of social impact multiply within the metrics. So we will have to attend to it. You'll have to say how you are including, how you are benefiting, how these two things that Dan talked about earlier, nature recovery and social recovery, can work together as part of our delivery of those kind of units, which you are then going to take to the market. I think what we're seeing through some of the work that we're doing is that actually it's a benefit in the market. That some of the buyers are very interested in what you're able to deliver in terms of social recovery as well as nature recovery, and those two things together. They see it as added value. In theory, perhaps you might get a market kickback if you're able to do those two things together. It's also ethically the right thing to do, is to make sure that you are behaving in a way that takes into account the communities that are surrounding the pieces of the land that you are working with. But it will also help you too. There's a lot of local knowledge, actually, that's very important in terms of establishing long-term nature recovery habitats. You will probably need their help at some point. Certainly, that's what I mean about the conservation infrastructure. The conservation infrastructure that we have in the country is not strong enough to shoulder the nature recovery need that we have at the moment. And I'll give you an example. So we obviously deal with the National Wildflower Centre. Our mission is to restore wildflower habitats. We are reliant, the whole industry is really reliant, if we're going for high integrity habitats, on wildflower seed collection. There aren't enough people within the organisations delivering those things to go and do enough wildflower seed collection right now to deliver the habitats that we need to deliver. We need people to do that, and we need to be able to do that a way that we can afford to do it. So those communities will be really fundamental to us delivering these things in the long term as well. And when we include them in those projects and in the biodiversity net gain process, that's good for them too. So we get a healthy planet, healthy people, circular thing going on. So it's completely in our benefit, it's in their benefit, and we'd be crazy to ignore it.
Yeah. I wondered, Rob, whether you wanted to touch on where you've had some, great experiences really of working with local communities in delivering nature restoration.
Yeah, well, Brontie was talking about, giving nature a voice, and I think what we've learned planting out, we're at about 5,000 hectares so far, and about 40, touching 45, hopefully going for 50 schemes this year. So quite a substantial amount of planting, but that's a lot of land use change. That's a lot of effectively marginal livestock farms coming out of agriculture and going into woodland creation, and sometimes it's quite intensive timber forestry, and sometimes it's forestry where nature and carbon are the stars of the show and the timber's the sort of sideshow. But we do it all, and we do try and design within the regulation. We design sensitive schemes. We go through all of the environmental impact determinations. We do all of that. We tick all the boxes for the permits. But by law, or by the permitting rules, you only have to speak to the local councillor. And if you have a good local councillor, they have a good relationship with their community and you get sensible feedback. But quite often the local councillor isn't plugged in, or it's impossible to, they're busy. So actually what we've found is two things. One is going above and beyond the regulation, and then creating a space where people can come before you go on the public register with your design to talk about it. And listening to what the local people say is incredibly helpful for us. We flush out water supply issues. We get views around, there's too much timber in your design, I want more nature. If it's a forestry area, sometimes they say, it's really close to the mill, why aren't you putting some more timber in there? So we get feedback from communities when we sit down and talk to them, and some examples of good outcomes from that. One was a community who are very environmentally focused, and they wanted us to focus on nature more in the scheme. And it started off quite, they were quite upset about the plan. We tweaked the plan a bit, but actually through talking to them, we've ended up doing a 20-year lease where they have an area of the site, and we're working now together with them doing riverbank planting and working together on the peatland restoration and wetland restoration, which is alongside the forest. And it's been a great outcome, but that's come about from sitting down and talking to them, listening, and then actually someone had a good idea, and then we put that into practice. So that was one good news story and good outcome of going above and beyond regulation. Another one was beef farmers in Aberdeenshire, very upset about the design, and it became slightly forestry versus farming. And again, we went up there a second time to speak to them and resolve the issue by effectively, we've done a land swap. So one of the farmers in the area has given us a piece of land to plant trees on, and there's about 2 or 3 fields in the middle, which they've taken back into agriculture. So I think from that, we've ended up with a balance. And so that community engagement's been really important. And other piece, just recognizing that farmer view and that forestry transition, towards forestry from farming. We've done a skills training program. We've trained about 16 people over the last 2 years, and we'll maybe do 8 or 10 this year. It's a fully funded training scheme where normally farming community members who've got some pretty good baseline skills can transition across to forestry skills. And that's been really impactful. It's helped us, and it shows that we're recognizing the impact of the change that we're making.
Yeah.
So actually in the UK, listening to people and going above and beyond regulation has been really important and has got us in, I think, into the right way of doing things. And what we've also learned is that in the UK, a little bit goes a very long way. It's totally different in the global south. Different projects, different parts of the UK are different. But we've found a model that does, I think, help keep the social license for what we're doing. And the investors really enjoy hearing about these stories and seeing this positive societal impact as well.
Yeah, brilliant. Thanks for going through that. So I've got another question to go to all of you. With the recent EU nature restoration law, I think Nicholas touched on it earlier in the keynote speech, how can we influence policymakers to ensure the best possible outcomes for nature, but also local communities as well?
I can maybe have a first go. So I think what we're facing now is almost like a Minsky moment, because we're not properly taking nature into account. And by doing so, I think we risk a massive value erosion across the board. And so I think where we would need regulation is in terms of investment. And I see here pension funds playing a very critical role. And we spoke on the bus just looking at the UK pension schemes. I think there's 2 trillion at the moment in AUM across the UK system. Imagine if you applied 1 or 2% becoming mandatory for investment into nature. That's 10 to 20 billion a year. That's quite significant. So I think regulating pension schemes which are aligned to multiple generations, they have a much longer investment horizon. I think that would be very encouraging. And I also think that we need to insert certain hygiene factors when it comes to communities, because as you mentioned, when you operate in the global north, it might be more obvious, but if you operate in less protected jurisdictions, including in the global south, we need to apply thresholds such as profit-sharing mechanisms, and we also need to consider the implications if we don't address the communities. Just on the back of climate change, consider, to Nicholas' point when he discussed, security, what happens when all of a sudden we have 10 to 15% of the world's population being refugees because they can't stay in their current countries. So this goes way beyond sort of a 5 to 10 year investment horizon. This is structurally in the world at the moment. We need to find these long-term proper solutions where we build resilience in communities and for nature as well, of course. And I think we need to step up and show that level of solidarity, I think, and finance that transition.
Yeah, thank you.
Do you want me to just add to that? So I think when we think about something like nature restoration, what's a really important concept to get our heads around is who we're restoring nature for. And the reality is, we're not restoring it for ourselves. And this is a really hard thing to accept, that we are spending a huge amount of money and a huge amount of time attempting almost the impossible, which is to restore nature to a specific baseline. And again, there's huge critiques around which baseline, which Juliet can cover. But let's just pick any baseline. Pick 1924 if you want, pick 2024, it doesn't matter. The issue with this is nature restoration laws are very, very, very long term, and nature restoration itself takes absolutely ages. And so we have to start telling ourselves a new story. Whenever we engage with these laws, whenever we engage with this policy direction, you have to take yourself out of the equation. You probably have to take your children, your grandchildren out of the equation as well, to be honest. We are talking 7, 8, 10 generations of humans' time. And that, for us, it's a really hard ask. It's a really hard thing to imagine, and it's a hard sell as well. And so either we all get on board with this new story pretty damn quick, or we are going to see regulators telling us to get on board with it. And it's going to be much harder and much more stick-based than if we get on board with it ourselves. So I think when we talk about community, I would encourage you to leave this session with the message that when we talk about community, we mean community in the widest possible sense. I mean, broaden it beyond all things that are currently in your brain. Broaden it to 7 generations of elephants and tortoises if you want to, right? It is not about us today. We are doing this in a really, quite frankly, altruistic sense for 7 generations, 8 generations of our species' time, but also of all of the other species that may, and it isn't definite, may survive the coming transitionary period. That's a really hard thing to make law for, and it's harder to do that with people that won't come to the party. So I think if you are already at the party, or you're hearing this kind of storytelling for the first time, then congratulations, you've joined the winning team, hopefully.
That's really nice.
Over to you.
That's over to me. So yes, I agree with all of that. The thing I get frustrated with, really, is that, A, the timescales, but B, the fact that nature is at the beginning or end of everybody's supply chains. Doesn't matter whether every business. So why on earth would you not have nature somewhere in your investment portfolio, even if it was just to protect everything else, even outside of all those things? And it's frustrating when you when you were talking, Rob, about this needing liquidity and this struggle between long-term and uncertainty, and the way in which the markets work. And I don't really know how we get over that, but I feel like that is our biggest hurdle, that and the ability of people to work together rather than just being constant competition. I can't see how we'll move forward from that, but that doesn't mean that we can't, because some people clearly are trying, and we are seeing these mechanisms coming online, and we just need to speed that up.
Can I just add to that? I do think that we're evolving in that direction with new directives like the TNFD, et cetera, because that is enhancing corporates' understanding of how they're impacted by nature and what the sensitivities are. So I know it sounds incredibly positive, but I do think we've accelerated exponentially our understanding of nature, and we're quite early on in the journey. So hopefully that will force companies to take more act. And of course that's very idealistic, because probably they'll find ways around it, but at least I think that gathers their sort of understanding of how they're exposed to nature. And we're seeing it already in the insurance industry, and so I think corporates are not,
Well, actually, you just reminded me of something, because the thing that is also really exciting, hopefully, is that there is some really exciting technical innovation as well that's coming along to support us to prove that when it's worked, it has actually really worked, or equally when it's not working, that how you can catch that early on. In terms of some of our kind of genetic technologies, in terms of our acoustic technologies, our satellite technologies, there's actually lots of really exciting things happening that are also really worth investment, that maybe will help the bigger picture as it starts to evolve.
So we're coming to the end of our session shortly, but I wanted to think about looking ahead. So what changes do we think in institutional asset allocation or compliance markets could accelerate investment into nature restoration projects? So how can we accelerate the good that's happening now and some of the opportunities we've highlighted during our discussion?
So I think we're seeing emerging sort of trends similar to what we saw in the infrastructure space, where you have these blended finance approaches, because I don't think we can solve for the investment we need in nature without bringing all of these actors together. And I do think that multilateral development banks have a critical role to play to sort of underwrite some of the risk. And also in their lending practices, I think they can set standards that apply to corporates. So that will be almost like a semi or quasi compliance framework where corporates need to abide by certain disclosures and standards. So I think that combination of different sort of private and public partnerships coming together is critical. I do think, though, that one of the challenges is the capacity on ground, and especially if you look at emerging markets where scale might be more difficult, but we're seeing signs of it. And as mentioned, it's one of the top priorities on the G20 agenda. We know, in South Africa next year, they're probably going to continue with that conversation because they're also a very nature-rich country. So I think signs are there. My question is really, what will it take for us to reach that tipping point of recognizing the urgency? I feel we've come to almost a normalized or a desensitized state where we have these horrendous natural disasters, and we're sort of not reacting as strongly as we would call it a decade ago if only one of these incidents occurred. So I'm just wondering what it would take for investors to actually feel the urgency to act now, because we don't have time.
Thank you. I think just to add, in terms of answering your question about how we speed it up, I mean, it won't surprise you to know that my view is just add nature into the governance. So I think governance has a huge amount of power. Governance is basically the kind of jam that holds everything together. It can be the framework that we justify all our decisions on. And in order to make sure that justification is sound for the future, we really need voices in there, whether is the voice of local communities or whether it's the voice of nature or the voice of the ocean or whatever it might be. You have to have those diverse voices in the room in order to make that governance structure really, really good, really accountable, really transparent. And I think that when we talk about speeding things up and recognizing the constant tipping points that we keep hitting and going through, governance has such a huge power there to be not just redesigned, but literally the old stuff just thrown out, chucked away, and an entire new systems design. And that can happen with something like nature on the board, oceans on the board, rivers on the board, that kind of thing. It can happen really, really quickly because everybody's thought process just suddenly changes. It's like a mind flip in the room. Everyone just goes, well, nature's in the room, or the ocean's in the room, or the river's in the room. It does really change things very quickly. So I think in terms of speeding things up and starting to really sit up and make huge sea change, no pun intended, you really need the sea in the room.
So maybe we need to change the legal definition of corporate governance. It needs to be something that gets embedded in there. So I agree with that. I think there's something about packaging this up a bit better for investment at the scale that people actually get excited about investing in. Sometimes I think you're right, I think things aren't big enough. Some of the investment opportunities aren't big enough. So if the 13 most influential companies in the world turned around tomorrow and went, okay, fine, let's do it, what would we do? Probably have a little mini panic about how we were going to, actually put something on the table in front of them. So I think there's something about packaging up the opportunity, particularly around nature restoration, but then packaging that up also with all the other things like water or carbon or nutrient neutrality and like that. So you kind of go, it's what you were talking about, that, here's your natural capital offer. All these services it'll be in multiple places because nature is decentralized, but we'll package up in a way that's investable for you. So there's something around that, I think.
So trying to tie that all together a little bit, I think it's about turning what is a massive risk into an opportunity. So stat that grabbed me, that PwC published a report finding that 55% of global GDP is either moderately or highly dependent on nature as its backing. And when I heard that, that's $58 trillion of value in our society that's reliant on nature continuing to function, and the oceans and the sea. And I was just sort of blown away by, right, okay, so that's the source of, effectively human life. We need that, but also our economy needs that. I don't like, and I think most people don't like the idea of taking nature, trying to work out how to measure it, putting it into boxes, putting numbers on it, it's a bit dirty, isn't it? Kind of, how do you value nature? And nobody really likes that, because it's, the best thing about it is it's completely organic and, you can't measure it. But actually, I think if we can turn it from this huge existential risk into a massive investment opportunity and get on the positive about it, that combination of the risk and the opportunity, we need to solve this now. That doesn't seem to be working. Scaring people doesn't seem to work. So actually, I think we need to go on the sort of sales pitch and say, actually, this is a huge investment opportunity. We can do good along the way. We can keep GDP intact, whether you like capitalist economics and society or not, but that's the world that we live in. So if we can turn it into an opportunity, I think that's the way to go. And I think the other piece around that is, once we've worked out how to measure it and how to transfer it and which values of different parts of nature, and we've got a system and some tramlines of regulation to trade it, I think what we need is, as I said earlier, is that market. We don't have a liquid market. We can't commoditize it, contracted cash flows, all the investment world's understanding of how you fund something. It needs a strip of value of some sort, income, and the value might be nature incomes, or it might be dollar bills from selling carbon credits to corporates who need them, but we need something to finance. And it can't just be leveraging up land freeholds and hoping that they'll yield something once you rip the farming grants away. So I think there's a lot of in there, but if we can get people, investors thinking about it as an opportunity, and governments thinking, I can unlock this by creating some kind of liquid market. And as I said earlier, I think the only way to really kickstart it is polluter pays, compliance markets. Because if that happens, I think we'll do 3 times as much investment 3 times as quickly, and that will have better impacts quickly. So compliance markets could really get that liquidity for those credits, which we can then trade.
Brilliant, thanks, Rob. I think we've got just enough time for a couple of questions. I've got some on Slido, but if there's anyone who wants to put their hand up, and we'll send a microphone over to you. I'll go to one of these first. So I've got one direct to you, Brontie. So where does the change in governance need to happen for nature to get a voice? UK corporate governance code, or, where?
That's a really important question, and I would just preface that with the idea that the UK corporate governance code, and you all obviously probably know this, but it only applies to PLCs, not small family-held corporations, and B, even then, the PLCs, it should obviously be complied with, but there's often ways around that, and that is because the corporation still, and in fact our dominant culture still sees growth at almost all costs as the dominant narrative. And so something like a corporate governance code, it will absolutely kind of shift the rudder slightly, but it won't apply to the vast majority of small businesses in the UK. And on top of that, a huge portion, and I don't quite know, you probably know the figure better than I do, but a huge proportion of UK business is non-PLC. So it wouldn't even apply. So that's what I would preface that answer with. And then the actual answer to the question is, where do we see the most rudder movement? Genuinely, I think it's you guys. I think that's kind of why I'm here. I think I might have just realised it in the middle of the stage. I think if you can shift big money. I think if you can shift institutional investment, if you can shift the mindset of you guys and your people and your communities, I think that is where governance could change really, really quickly. And as an example, and I'm not saying this because she's a good friend of mine, this lovely lady here, and I'm not saying this because we're sat at Eden right now, but if you think about it for a second and you think about what Eden is doing with the Wildflower Bank and the credits that they will be selling, and I hope they won't mind me saying this, but they probably will be more expensive than a bog standard biodiversity credit, right? But if we, is that okay? Can I say that?
Yeah, that's fine. No, we want to be Waitrose.
Yeah, with a Waitrose, but with real integrity and potentially, nature with a voice in the room and really good governance and really genuine use of tech, clean tech and good tech that tells you what is going on with that credit, right? Your communities will have a choice. You'll be able to look at the marketplace, which will be created, no doubt, and say, I can buy this one for £15,000, or I can buy this one for £30,000, it's twice the price, whatever. And there'll be a whole range in between, right? But if you can leave this session understanding that you really, really must not be buying the one that's £15,000 with no integrity, no good governance, no good tech to tell you what's actually happening, no real good, strong feedback loops for outcomes, whereas this one here shows you categorically, we did these things, they were really great for biodiversity, we've increased net gain, we've increased biodiversity by this much from this baseline, which, by the way, is 100 years ago, not 10 years ago. So, we genuinely have increased biodiversity. Thank you very much for your £30,000. I think that's where it changes really quickly once we get into that mindset. And it isn't just about, the exact amount of money you're spending. It's about the governance and the integrity. So it's a very long-winded answer, sorry.
Thank you. We have a question here.
Hi, my name's Kate Campbell from Astrid Advisors. And I have a question in terms of, so we work with institutional investors, and by institutional investors, I mean the pensions and the insurers mainly around Europe. And when you go and speak to them about natural capital, so we spend our time on infrastructure and energy transition, and we spend our time there because that's where the capital is to be invested right now. So when you go and speak to them about natural capital, many of them will say, not all of them, but many of them, most, will say, that's not in my mandate. I don't, it's not an asset class we understand yet. I would like to, but we don't at the moment. I'm not mandated to take that type of risk. And so quite quickly, you hit up against I don't have a bucket for it. There might be a bucket coming at some point, but it's not there yet. And I just wonder, is there something to be learned for when we think about, I guess, what Dan and Rich are doing the generation side of thing, the wind and solar, the subsidies from government. Haven't we got to get government in to de-risk? And I know nature is so more varied than a solar auction, but unless it's de-risked, I would bet that the pensions aren't going to come. The big corporates might come, Google might come, Meta might come, because it helps their green footprint. But unless it's de-risked and you crowd capital in that way, I think it's going to be tricky. So I'm just interested in thoughts.
I'm really sorry because I'm not a finance person, I'm a plant nerd. But this is the bit I don't understand is, when you invest in nature, you do risk all your other things. The biggest risk to everybody's investment is nature loss. So I don't understand the bit about de-risking. Because because we're in a situation now where if we don't do something, we don't, all of it's irrelevant. Yeah. So, which may be glib. I don't mean to be glib. It's the bit I struggle with in those.
I need to deliver this amount of pension to my retirees next year. What you're suggesting is pretty risky. I don't understand it. I might lose money on it. And if I can't deliver the outgoings to the pensioners, then I'm in trouble. So, as you say, it was going to take someone at the very top to say, stop, we need to take a step back, we need to think about this on a long-term basis, and where's the government to help de-risk this, and then I'll come in. But it's not my job, looking after my pensioners, to be the first mover. I think. But
I mean, I think there's two levers there, by the way, just before, I know that you probably have way more important things to say about this sort, because it's not my area either, but there's two levers. There's a lever of the government saying it's not risky, and then there's the other lever, which is coming down the line, which is saying any director of any company, whether it's a pension fund or a big corporate or a small family-held company, any director who is willfully ignoring the nature loss that we are facing and the climate struggles will be liable to their capital providers, right? That's coming. Directors' duties is quickly coming on board. You know, yes, we have Section 172, we have those things, but they haven't ever really been that strong. But for nature and the environment, I mean, it's always a take into account the environment, right? But we will be seeing court cases, and it will start with the court, it will start with the judge saying, you should have seen this coming. You are now in huge debt and your raw materials are gone because you didn't look after the thing within nature that provides those raw materials, and therefore you are liable to in court as a director of this company. So there's two, I don't have the answer to it, but there are two levers that are coming down the line.
The last comment from you. Sorry, Rob.
So just a few thoughts on that. So, look, I think it's about, yes, putting pressure on government. That's why I'm so keen that if anyone takes anything from, you know, what should we tell the civil servants and governments, it's please give us access for peatland carbon and woodland carbon code and any other credits of that nature to the UK emissions trading scheme. That is a existing market. And if we had that access for these credits, and it is being discussed in government, it might happen in 2026, 2027, pick a date in between now and 2030. So we've written a campaign paper about this. Please get the woodland carbon code into the emissions trading scheme next year, and we will do way more, because then there's a liquid market, de-risking the investment, allowing us to trade, put into place contracted cash flows. You can create derivatives of it. You can de-risk the investment and bring the cost of capital down. So I think that is one way that we can campaign for that doesn't involve a balance sheet subsidy. It's the polluters who are paying, which seems to be easier rather than saying that we'd like to have ROCs and CFDs all over again, which doesn't seem likely. 20-year CPI-linked income streams, we would love them, but it's unlikely that might be forthcoming for this market. I think the other thing is when we're looking at our strategies, we'd love to do out-and-out social and biodiversity credit-only projects, but we can't necessarily bring institutional investors who are used to contracted cash flows and solar parks when they had 20-year CPI-linked feed-in tariffs. It was a no-brainer to do it. You know, we can't bring them from infrastructure investments that are de-risked straight into something that is quite scary for them. So our approach at Foresight has been to buy the freeholds of the land to underpin the investment. It's a good inflation-beating investment. Put in timber or food or something that is already an existing income stream, and then blending in carbon credits, biodiversity credits, doing your nature projects as part of, you know, provisioning service that already exists, and make money for the investors doing the kind of medium risk, the risk-adjusted return, is how we want to bring the investors on the journey. Fund 2, Fund 3, Fund 4 might be moving much more towards the things that has more impact. And so that's kind of how I think about it. I think we've got to take the investors on a sort of medium to high risk journey, make a profit out of it, and then say, okay, the next fund is super high impact. You trust us now. There is a compliance market, but it's a journey to go on. I'm quite positive about it, but we have these conversations with institutional investors all the time. And it is, if they don't already have natural capital in the wheelhouse, there's quite a big education to do. But I think we will get people there, because the risks of not doing it are very large, and there's money to be made if you structure it right.
Do we have time? I just want to say there is a number of institutional funds now with more novel mechanisms like HSBCs CAM in-setting fund, if you like. So I think Brookfield is also launching a fund. So I think it's all about finding novel financing mechanisms which underwrite some of the risk. So I don't think we can think of it as passive long-term investments. We need to tailor it so we can find solutions to these exposures, and we are. And I think there will be a number of failure, as there always are before we get it right, but there are, quite significant funds out there that address these issues. So
Thank you all.
growing, yeah.
Thanks. Right, I think that's all we've got time for. Lots still to discuss, I think, over coffee and dinner. And I think there'll be some opportunity tomorrow as well over some workshop sessions. So thank you so much to our panellists. Great discussion. Thank you.